you might pay thousands more in commission. I might be able to increase the value of your building by hundreds of thousands more. And so it's one of those situations where you step over $100 bill to pick up a quarter. Hey, this is Bo Barron, CCIM, owner and managing director of Barron Commercial Group. And this is...
Look what I found.
Timmy.
Timmy. I'm Timmy Barron, ADHD. I'm an actor and a comedian. And Bo is teaching me all about
commercial real estate.
Commercial real estate. Because this is commercially speaking.
Thank you.
What are you teaching me today?
And today we're going to talk about how to work with a commercial real estate broker. We're also going to talk about different types of clients. Some you want to be, some you might want to avoid being. Why don't we talk about some categories of different types of clients? And I bet the rest of this conversation will probably flow from there. You've got these folks that are advice seekers. Like I had one of these guys call me yesterday. Now, no issue with advice seekers at all. Like this guy is a former client. Shouldn't even call him a former client. I fully expect to do more business with him. But he called and he had a quick question. People call us all the time and they're just looking for some advice. And so it makes a lot of sense for us to do that. We're happy to do that. And that happens on a regular basis. The other side of that spectrum, though, are the takers. Takers are these people who come in under the guise of, we're evaluating if we want to hire you. So they're putting me in a position where I need to demonstrate my expertise. I need to give them good value, good information up front in trying to win their business. But what they really do is they're just taking. They have no inclination whatsoever to actually hire us. They just want to get our expertise under false premise and then try to go do it themselves. Those are the takers. And you know what I can do about that? Absolutely nothing. My why and why I'm doing this business is way more important than my ego or the possibility that I might get burnt again.
Do you know of somebody that is taken from you so much that you're like, they call me up, I will talk to this person, but there's a few things I'm going to say. Like, are we planning on working together, or are you coming just to get free advice from me again? Or do you just bite the bullet and like, here they are again. Well, I'll maybe.
What I'm not saying is that I'll work with anybody in any situation. So there's certainly people that I would decide not to work with, where I might refer them to my competition.
Right.
Yeah. Which I've absolutely done. So I probably wouldn't be that forward, but commercial real estate business is a service business. Like, we're here to serve our clients. And so if we get to a point where I decide to enter into that client relationship with somebody, I'm there to serve them. I'm not there to protect my pride. And that has some inherent risks. Like, we might get burnt. And that happens sometimes. And it's just part of the job.
Yeah.
It's part of the gig. So we also have those who are close to the vest, or just the untrusting type of client. These are the folks who don't really tell us what's going on, and they might give us some parameters, but they don't tell us what they're actually trying to accomplish. We don't really know what we're trying to help our clients do.
Right.
If they would let me in, then I might be able to do a much better job for them. So when, my advice to anybody who's going to work with a commercial real estate broker is find one that you can trust, that you can let into your circle and actually share what you're trying to accomplish. Like, what are your actual goals here? And some clients, man, they're just untrusting. And I get it. Maybe they've been burnt before. Maybe they've shared their ideas with people before, and then those folks have gone and done it without them. But man, trust is a big part of this business. And without it, it's much harder for me to serve the actual needs of our clients. And here's a situation that happened to us recently. We were contacted by CBRE, big national commercial real estate company. I think they're the biggest in the world, actually. Their Louisville office contacted us, and they wanted our help, but their client, who we're actually serving, was confidential. Like, they couldn't tell us who it is. Most of the time, if you're going to sell a piece of property, you want to know who's going to go in there, right? So it was a little bit more challenging, because I couldn't even represent who my client was.
Right.
When I say this was actually a deal Todd Humphreys in our office was working on.
Your biggest producer, Todd Humphreys?
That's him, yes. Top producer, Todd Humphreys.
Top producer, that's right, top producer. Top producer Todd Humphreys.
He's a bigger man than me. Not a big guy, and he's a pretty big guy. So
Yeah. Is that what you're saying?
You're gonna have to cut that one. Nobody in this office is gonna appreciate that joke. What happened in this situation though was we finally got a piece of property under contract, and we got the deal done, and then we finally figured out who it was. It's a big deal for Davis County, for Owensboro, Kentucky. Mm-hmm. It's a big deal, but it was just more challenging because we didn't have all the information.
Did you at least know what zoning you would need to have in place?
We knew that information. We knew how much land they needed. We knew what side of town they wanted to be on.
And what kind of business it was?
No, I didn't know what kind of business. Matter of fact, we thought we knew who it was, and we were way off.
Oh, wow. Yeah, it's fun.
No, because we're always trying to figure out who it is. And so we got on the website of CBRE in Louisville, and we looked at their client list. We're trying to say, wonder if it's them, wonder if it's them, wonder if it's them.
Yeah.
We were wrong.
Were they not telling you because they were untrusting, or was that just an example of somebody who couldn't give all the information and how it made it difficult?
The reason was if it got out, it would probably kill the deal. The reason was sound, valid, it was good. Sometimes people just don't want to let us know. And so it benefits the client, to find a brokerage company that you can absolutely trust to serve your interests, and then let them in. Like, let them know what you're trying to accomplish, and then we can do a much, much better job.
Yeah, before we move forward, I just want to know, are you willing to open up to me about your marriage? How's your relationship with your kids? I want to be able to serve you. We need to be able to get vulnerable and open. You need to trust me.
Yeah. Those are not questions I'm asking at our initial needs analysis meeting. You know what I mean?
Sure. Yeah.
But sometimes you can get there, man. You do work with, when you get to work with great people and you develop great relationships, you're going to be talking about your marriage and your kids and what you really want out of life. And man, when you understand that about somebody, you can serve them at an even deeper and more impactful level. That's incredibly satisfying. Yep.
Oh.
Yes.
Okay.
Next one are the Hound Dogs. The Hound Dogs are the clients that just want to date all the brokers. They want to talk to all of us. They want to take us all out to dinner, not at the same time.
Yeah.
But I'll give you an example. There was a auto dealership. The owner of the dealership had some commercial real estate. What he would do is he would say, look, if you bring me someone, I'll pay you. Absolutely. But I can't hire you because I sell cars to you and all your competition. Now, I kind of understand the thinking there, but here's the problem with that. My clients who have hired me on paper, we're going to serve them first. Like, he's last on the list. He gets the leftovers. They think that if we hire Barron Commercial Group, then I'm missing out on all the potential opportunities that any of the other firms in our market could bring them. And what actually happens is nobody's going to bring them anything. If they were to hire us, we'd take half our fee. Like, we actually market to our competition so that we can do more deals and access the biggest tenant pool imaginable. And they end up getting better deals at higher prices more quickly.
Do you remember the movie A Beautiful Mind with Russell Crowe? There's a scene where he's explaining, it's like when he came up with this not crazy concept, but like his breakthrough concept. It was because he was at a bar and he was explaining how every guy at the bar.
We all go for the blonde. They block each other. Not a single one of us is going to get her. So then we go for the friends. But they will all give us the cold shoulder because nobody likes to do a second choice. Well, what if no one goes for the blonde? We don't get in each other's way. And we don't insult the other girls. That's the only way we all get laid.
Well, I might have to go watch that movie again.
It's so good. It's a good movie.
Another type of clients are the cheap ones.
Cheapies.
And trying to pay discounted fees. This happened to me yesterday. We've got a big multi-million-dollar listing that we're probably going to bring to the market in the next week or two. And the client reached out and said, look, we'd really like to do 1 point less on the commission. I said, no, we charge market rates. We're not a discount brokerage, And they said, fine, we made an agreement. As long as I agree to it on the front end, we're good to go. But I had this guy call me up. He just built a small industrial building. How fast do I think I could lease it? What's the market look like? Is there a lot of demand for this kind of building? Blah, blah, blah. I'm trying to win his business, so I'm sharing all this information to him. Well, how's the agreement work? And I explained to him that if it's a 5-year lease and there's 60 lease payments, then a certain percentage of those 60 payments I get paid up front. And he said, so if it's a 3-year lease, then it'd be that percentage on 36 payments. I was like, that's correct. So I'm incentivized to get you a longer term lease, which benefits you and the value of the building.
Right.
He said, well, I'll just do a 1-year lease then. And I was,
dude,
now
you.
Okay. I told him, I was like, look, if that's how you're thinking, I get it. We're probably not a good fit. And I'd suggest you call. And I gave him the name and number of one of my competitors.
Yeah. But he wasn't like, whoa, wait. Oh, wait.
Actually, what he said was, we talked to my wife about it, and then we'll get back to you. I was like, never going to hear from him again.
Right.
And I haven't. I have no problem with the guy. He was honest with me.
Right.
You know? And so we were able to determine really quickly that we weren't a good fit.
Wouldn't that be an opportunity then to be like, yeah, that's true. I see where you're thinking there. But here's what you're running into when I bring you a 1-year lease as opposed to a 5-year lease, and the problems you're going to have to deal with that could be way more costly than, this short-term commission that you're thinking about, right?
Sure. And in some certain circumstances, I might have done that.
Mm-hmm.
In this case, my gut was already telling me he might be a taker and I might be wasting my time. Not wasting my time. I don't mind giving people good information.
Sure.
And helping people. But the opportunity really wasn't there. And in my mind, he was checking all the boxes for someone who's not a good fit for our company.
Sure.
But let's say it was a large opportunity and it was an exciting project. I might sit down then and say, look, a 1-year lease will provide this much cash flow. But when somebody looks at the value of your building, if you're ever going to sell this, and they see a 1-year lease, their risk for having vacancy goes way up. And if the risk of vacancy goes way up, then the cap rate goes up and your value goes down. You might pay thousands more in commission. I might be able to increase the value of your building by hundreds of thousands more.
This is why you want me to be incentivized to get you a higher.
And so it's one of those situations where you step over $100 bill to pick up a quarter. There is also your great clients. They let us in, they understand the goals, and then they let us go do our job.
Yeah.
A lot of clients make a big mistake. They'll hire us and then they continue to work alongside of us, almost in competition with us. I had a client one time, and this has happened a number of times. They'll come to us. They've tried to lease their property or sell their property themselves. They have not succeeded, and then they'll give up. Fine, I'm going to hire a broker. And right before we're about to sign a listing agreement, they'll say, hey, look, we've talked to these 6 people already, and so we want to exclude them from the listing agreement. So if those, say, 6 people come and buy or lease this space, you don't own your fee. Now, this creates a big problem for the client relationship. As soon as I agree to an exclusive like that, I am now not aligned with my client anymore. I'm actually in competition. I need to go get a deal done before he does a deal with one of these people.
Right.
So the way we generally handle when somebody asks for an exclusion like that, we'll either say one of two things. Either, hey, look, why don't you take another couple weeks and see if you can do this yourself? Mm-hmm. Follow up, close the loop with these folks. When you're ready, hire us, no exclusions. Or we'll say, we'll take the exclusion, but the exclusion will sunset in 14, 21 days. Okay.
Yeah.
So while we're ramping up all the marketing, you go close the loop. Sometimes I like that better because I want to go ahead and get control of the listing and start to work on it. And there's a good chance that they haven't been able to do the deal already. It's not going to happen. But I want that exclusion to sunset pretty quickly so that I'm always in alignment with our clients.
I guess you think you're hanging on to some sort of control while at the same time putting a fire under your ass to get one before I do, right? Is that the misconception?
I think sometimes people are like, they really want to do it themselves because they don't want to pay a fee. And so when they finally kind of give up doing it on themselves, they're hanging on to the possibility that maybe I can still get this done without paying a commission. They'd be much better off if they said, hey, look, we've talked to these 6 people. Here's who they are. I haven't been able to get a deal done. Maybe you can.
Right.
And there's a good chance, flat out, get a better deal with somebody that they wanted to exclude than they would have gotten in the first place.
It puts into perspective my agent or my agents. I want to trust that they're out there fighting for me every day. And whether I get a roll through them or not, they're still putting in the work for me. So if you are my broker and I find a buyer, it's like, okay, Bo, I got somebody, we're good. It would be good on me to give you a percentage or a somewhat of a commission because of the work that you've put in for me anyway, even though I ended up doing the deal. But that's not how this situation.
These are exclusive agreements. And so the seller actually gives up for a period of time the right to do a deal on their own. Our listing agreements actually say if anybody contacts you directly, you agree not to talk to them and to send them to us.
Yeah.
We had a situation one time where Todd was going to show a property for a
top producer.
Yep, top producer Todd. He was going over to show some space in a strip center, and a competing broker went and called our client directly. Big no-no, bad form in the first place. Our client said, sure, you can show it, and gave him the key. And so Todd and this other broker end up at the same time at the same space showing it to different clients.
Welcome to the Thunderdome.
It kind of went down that way. The other brokerage company never should have done that. Our client should not have allowed them to show it. Made us look bad, made them look bad. Our clients, these people that were seeing the space were like, what the heck's going on here? Did these people not talk?
What ended up happening?
Well, we had a conversation with our client. Hey, look, this can't happen. Okay. With the other firm, the other brokerage company called and apologized.
That's good.
They've done that a couple times to us. They always apologize. It's one of those situations where, you stop buying it after a while, but I'm not suggesting that our competition doesn't know what they're doing. A great commercial real estate broker will provide certain value. All right. One is being able to negotiate. I can't tell you how many negotiations I've been in where somebody says, well, I'll tell you what, I'll meet you in the middle. That's lazy negotiation. When you negotiate, it's never just about the price. You negotiate the entirety of the deal, the terms, the due diligence period, all these different timelines, the amount of earnest money that's going to go down. And until you've agreed on everything, you haven't agreed on anything. Lazy negotiation, it's just about the price, and you just meet in the middle somewhere and try to get a deal done. There's this guy in town. He'll bring an offer. Generally from this guy, it's going to be a low ball offer. And what this guy almost always says to me is, come on, Bo, let's do a deal. Let's get a deal done.
Right.
My job is to pull the most out of your client as possible to the benefit of my client. So none of this, come on, Bo. None of this, hey, let's just lazily meet in the middle and try to slam both of our clients into accepting less and paying a little more. Let's meet in the middle. Let's just get a deal done so we can earn a fee. That's lazy negotiation.
Yeah.
My job is not to find a buyer, but to find the very best buyer.
Right.
And
yeah.
We also act as a liaison. We're moving information around, finding out things, interfacing with appraisers, working with the lender. And we're also acting as a buffer. This is something I learned from our dad. He'd be talking to one of his clients in a deal, and they'd be all kinds of upset. You can tell that guy to go jump in the river, blah, 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 blah.
Yeah.
And Dad would call up the other side and say, my client respectfully declines your offer. Right. So we're a safe place for our clients to unload, and we take the unproductive emotion out of the process.
Yeah.
We also quarterback the entire process. Let's say we put a deal under contract. We got a buyer, we got a seller. The purchase agreement defines certain terms. There might be environmental studies, some of the things I mentioned before. You got title work being done by the attorney. You got the lender doing their financial underwriting. All these people are working towards a closing, but they're not necessarily great at communicating with each other.
Yeah.
So we're only half done when we put a deal under contract. Getting it to the closing table takes just as much work.
Right.
And just making sure that everything that needs to be done is happening And anywhere there's a hurdle, we step in at that point and we try to bridge that gap. Another thing that commercial real estate brokers do, I think that is different from the residential side of the house, is we do a whole lot of market and financial analysis. I've got a client who's bought a couple apartment complexes. He's really good at what he does, but he wants my financial analysis of the properties that we're looking at. And so I'm doing the pro formas. I'm trying to figure out internal rates of return and net present values and cap rates and all that stuff. We're doing a lot of work on the financial analysis side to help our client make a wise decision on, should I buy this building? If I buy this property, is it going to accomplish my goals here? Also, just understanding demographics. And, we had a whole episode on economic-based analysis and just understanding market dynamics. That can be incredibly valuable to a client. So like right now, I'm working with a client who's an apartment developer, and they're trying to figure out what markets should they look at to potentially develop apartment communities in. I can help an investor decide, hey, is this a market that should have continued future growth? There's more people, there's going to be more demand for space, which means there's a better outlook for investment in the future in those markets. And there are ways where we can go in and analyze markets and compare. Cody, our sister, just had us do this for some of the markets she's looking at for her business. She's like, do you like Dallas, Austin, or there's a market in Florida? I forget which one it was. But we compared those markets, and I was able to share that information with our sister and say, look, Dallas 1, Austin 2, the Florida market was a distant third in comparison to those two markets. And the other thing that a great commercial real estate firm will do is they will provide help with, if you need a zoning change, if you need a conditional use permit, if, you have a change of use, if you need certain permits. We understand those processes, and we can advise and guide our clients through that process. Yeah, which is a huge win.
In Columbus, you got to show up on Wednesdays.
Yeah, that's right. Mm-hmm. In Columbia, Tennessee. Columbia, Tennessee. Yeah, meet with you on Wednesdays. You get to meet with everybody at the same time, as we talked about in that previous episode. Yeah, Columbia makes it really, really easy. They're very efficient.
Yeah, and by the way, if you need self-storage, portable self-storage, Go Minis, 100% Go Minis is the one to take a look at, right, Bo?
That's right. That's right.
Go Minis.
I should have been more less opaque when I was talking about our sister's business. Go Minis is the way. Yeah,
Go Minis is the best. They're fantastic all around.
Especially if you're in Columbia, Tennessee, or Nashville, or Memphis, or Owensboro, or Bowling Green, or Evansville, or Austin. I think those are Cody's markets. Go Minis, they provide a great service. Okay, here's the last thing I want to mention. Once you list your property with a commercial real estate company, what normal are the 3 Ps. The 3 Ps are, you put up a sign, you put it online, and yes, you should pray that the Lord will bring you the very best buyer. And we do that. Okay, so I'm not suggesting any of these 3 things are bad. What great commercial real estate companies do is they go many steps further into proactive marketing. For instance, we got a property listed a couple days ago. It's a bar downtown in Owensboro, Kentucky. Really cool space. All right. It screams microbrewery. It's really cool. And it's turnkey. It is ready to go. Okay. So what we did was we built a list of all the microbreweries and all the distilleries in Kentucky. Mm-hmm. And my guess is right now, top producer Todd Humphreys is proactively calling them right now and making sure that they know that this property is available and seeing if they have any interest in having a bar in downtown Owensboro. Mm-hmm. And he's out there talking about what Friday after 5 looks like in downtown Owensboro.
Yeah.
All the festivals that we're Festival City, USA. All right, the barbecue festival, the summer festival, all the tournaments that come to Owensboro, all the sports tournaments, all the different conferences that come to Owensboro. It's way more than you would expect for a city our size. And they fill downtown up with people all the time. This wasn't the case when we were kids, by the way, but it is the case now. Downtown Owensboro is a kickin' little place, and it's full of people. And if you operate a bar well, and you put one right here, you're going to have all kinds of traffic all the time.
Yep.
And he's out there selling it to targeted prospects right now. And then we're going to record it all in the sense that like we take notes on everybody we talk to, and then we report to our clients on a monthly basis. We give them a report. Here's who we've talked to. Here's what they said. Here's who we showed it to. And so our clients never have to wonder what we're doing. That's what great commercial real estate brokers do, as opposed to put up a sign, put it online and pray and say, look, nobody has called us. Nobody has reached out. I don't have a clue. You should probably lower your price.
Yeah.
Because clearly it's not because I'm not doing my job. It's because you're asking too much.
Right. The 3 Ps of the passive pissant. Put up a sign, put it online, and pray. And if that doesn't work, you add the fourth P of lower the price. Right.
Yeah.
Right.
Price reduction.
And then the biggest difference between that is the 1 P of the passionate powerhouse is the phone.
Yes.
Yeah.
Proactively using the phone.
The 1 P of the proactive, passionate powerhouse.
If you want discounted fees, you're going to get a discounted brokerage company that will have discounted services, and you'll get discounted results.
Yeah.
I'm not suggesting any of our competitors don't do any of these things. Okay. I'm just saying based on my 20 years of experience, great brokerage companies do these things.
Yeah.
And they proactively go find the best buyers, tenants, whatever for their clients.
Mm-hmm.
And if their clients will let them behind the curtain and share with them exactly what they're trying to accomplish, then we can do our best work and provide the most value. Man, that's the best way to work with a commercial real estate broker.
Yeah, that's great, Bo. That's real great.
You want a quickie quiz?
Yeah. Quickie quiz.
Quickie quiz. All right, explain to me the type of client who is a hound dog.
Yes, the Hound Dog is the one that kind of dates around. So they're talking to all the brokers. You don't want to show favor to any of them, which ends up hurting them in the long run because all the brokers are like, okay, he's bottom of the list.
Yeah, he's trying to play the field and not shut any doors to anybody. And as a result, he's at the back of the line for everybody.
Yeah.
Yep. Okay, great.
Thank you very much.
You're welcome. What is an exclusion to a listing agreement?
You might have to help me to explain it because I don't fully understand how the word exclusion works into it. But what I do know is if there's an exclusion, your client can look for a buyer themselves without you.
Okay, so you're close.
Yeah.
When you sign a listing agreement, you are saying to the broker that you're hiring that it is now your job to find me the buyer. I'm outsourcing that task to you. An exclusion is except for these number of people. If I do a deal with them, I don't have to pay you a fee.
I gotcha. So in a sense, you are being excluded if he's working with them.
Yeah. I wouldn't say it that way, but that's true.
Right. Yeah, I'm just trying to make it make sense, right? If you put exclusive in there, it makes me think, oh, that's what you want. I just want them to be working with me exclusively. But so you
these
call
people
it
would be
exception clause.
Excluded from the exclusivity of the exclusive right to lease. Yeah. Next question. What is a taker?
Yeah, a taker is somebody that goes beyond just asking for advice. They can tend to be a bit manipulative, making you think that there's going to be a deal to be had or work to be done, paid work to be done at the end. But that doesn't happen. They get as much information out of you under those pretenses.
Yep, exactly right. Okay, nicely done. Next question. What are the 3 Ps of passive marketing?
Put up a sign, put it online, and pray.
Absolutely right. Great firms go beyond that and proactively pursue. How many Ps can I fit in here?
I know.
Proactively pursue
on the phone
prospects
with your top producer so that we can smash anybody that's using the 3 Ps of the passive pissant.
Okay, name me 3 hallmarks of a great commercial real estate firm. I gave you a list of a number of them.
Yeah.
Let's see if you can name 3.
I guess the expertise, the market analysis that's run and done.
Okay. Market analysis was one of the ones I mentioned.
Okay. Market analysis and the negotiation skills.
Yes.
Yeah.
Those are 3. So we talked about negotiation skills, being a liaison or a buffer, quarterbacking the entire process, especially after you put something under contract and getting it closed, market and data analysis, financial analysis, help with zoning and political and legal, navigating those processes, and then proactively prospecting. That was kind of the list that we went through. So
nice.
Yeah.
All right.
You nailed it, man.
Sweet.
Nicely done.
Woo-hoo.
5 for 5, I believe.
Whoa.
There it is.
Yeah, 5 for 5. 5 for 5. I think you were nice in this, the second one. The
Exclusions.
Exclusions, yeah. You helped me out a bit, but you're
right.
I got it. Yeah. Yeah. Yeah, that's right. Yeah, this is the first time ever on Commercially Speaking where we are doing a Q&A section. One of them comes from Instagram from Kelly Burke. And this is in reference to...
I know Kelly. Hello, Kelly.
Oh, you know Kelly? Okay, cool.
Yeah.
Kelly was very interested when I started to post little clips from residential agents shouldn't do commercial deals. Her question comes, so how do residential agents transition to commercial? Can they do both?
They can do both. I think if they try to do both, they'll do neither in an excellent way. Totally different animals. And so you're really splitting your time, and you might be able to do both well, but neither really well. If you wanted to transition from residential to commercial, I would suggest you do a couple things. One is you need to get with a firm or someone in your firm who's doing a lot of commercial deals. Try to just assist in the process or team up so you can get a portion of the fee maybe. But you want experience in as many transactions as quickly as possible, just so you can build your knowledge base and build that experience. So you can get to a point where you can say with a straight face and a lot of confidence that the prospect that you're talking to should hire you. The other thing they should do, and I would suggest, is the CCIM education. Like taking those courses will make you dangerous very quickly, and it will introduce you to a network full of commercial real estate professionals that you can learn from.
Do you know many people that have gotten that so that they can be tweeners? Or if someone gets their CCIM designation, it seems like, I'm fully going into commercial.
Most people are already fully in commercial, or that's where they're heading. But I'm seeing more residential agents take CCIM courses than I ever have before.
Yeah. Okay, cool. All right. This one comes from YouTube on lower your taxable income, which you can watch right here. This is asked by Marios Malones. How do I put this into action? Cost segregation, bonus depreciation.
A cost seg is not something that you can do by yourself. All right. You need to be an engineer or a CPA. You need to find a great CPA. Okay. The other thing you need is a firm who specializes in actually doing the cost segregation studies. And so if you just Google cost segregation firms near me, or you can find those companies. That's what they do. So it's really just a function of finding those professionals that you can add to your team that can execute that for you. And if you have to teach them what it is, if you have to explain to these people what a cost segregation study is or how to take advantage of bonus depreciation, you're not talking to the right people.
Yeah. Is there a threshold that you would recommend people hit before looking for somebody for a cost seg? Because I remember you saying it might not be worth it to spend the money on a cost segregation study if it's not $1 million prop. I'm not sure if that's what you said, but
I remember people saying, hey, if your property's not worth $1 million, doing a cost segregation study, which could cost $10,000 or more, isn't worth doing. You're not going to save as much. But now with bonus depreciation, you can front load so much of that depreciation through a cost seg study and then through bonus depreciation that threshold is way down. So my guess is, if you have anything worth $500,000 or more, it probably makes a lot of sense to do the cost segregation and try to take advantage of the bonus depreciation that's available.
Cool. Oh, I think,
look though, if you have questions, shoot them to us in the comments. We're paying attention. We're watching.
Yes, we want to answer questions in every future episode. So you got them, ask them. I can't be the only one asking all the questions here. Cool. You follow us on social media at Commercially Speaking. Please let us know your questions, comments. You can go to the first link in the show notes to sign up to be notified every time we release something. When we've got bonus content that we're going to start unrolling out soon, you'll be the first to know about it and how to access that.
Are we rolling it out soon or unrolling it out soon?
Unrolling it. We're going to unroll it out soon. All right. I love you, brother.
Love you too, man. Talk soon.
All right. Bye.